Hello traders, Mark Pre-Markets here. My name is Mark Principato and I'm a chartered market technician, and thank you for watching another exclusive video technical analysis here for FXEmpire. So in this session I'm going to talk about Link USD, what we're anticipating next as far as inflection points, and why now is not a good time to get in. So with that being said, this is for educational purposes only. For investment advice, please consult a licensed investment advisor. Now, this thing has had an amazing run in just this month alone. The value has doubled. So what do? Is this a good time to get in now? And the question is no. The reason is this is the herd mentality in action. We've seen many examples of this recently in markets like gold and silver, even stocks like Kodak, where these things go vertical. They look like they're going to go higher forever, and they lure you in because it looks like a safe bet. But this is a counterintuitive thing. When things look this great, it's usually the worst time to get involved. This is not what a good opportunity looks like. Now you can argue and say, oh, but you could have bought it lower, and now look where it is. Right, and the market will reward ineffective behavior randomly. That's why people have such a hard time investing and trading and producing consistent returns. It's about effective behavior and following rules. So with that being said, I want to point out a couple of things. Number one, this 18 level, this $18 level is an important resistance level. It's a key inflection point that's proportional to this entire move. It's actually a projection relative to the low, okay, that was made back in March. So this is likely to produce selling activity. In the next few days, I would anticipate bearish price action at such a level. Perhaps we get a reversal, and that could be the beginning of the retrace. Now, again, we don't know because there's nothing here at the moment. All we have is a level to keep in mind. So we can take away a few things from this. For one, this is a bad place to be putting on new longs. All right. Number two, this is a good place to be locking in some profits and then seeing what goes on from there. Because again, there's no sell signal in this thing yet, but it doesn't mean we won't see one over the next couple of days. Now, where can this thing pull back to, and where would be the next buying opportunity? So the inflection points that are in place right now, first you have this 14.5 area right here, which is this little attempt at a pullback. That resistance there is likely to act as a support. That's going to be your first one, around 14.5, around 14. Now, it's important to wait for a setup in such an area, because if price clears it, then you're looking at this 11.5, which is a proportional inflection point. This would probably be the more ideal area to be looking for that retrace. Very common mistake is getting into these things too early after a little minor pullback, and then you're just buying into the top again. So you have that point. If that 11.5 is cleared, you're looking at 8.5. So that's the risk that you're looking at in this thing by buying it now. A lot of times when you buy into a high like this, you now put yourself into a position where you're a psychological weak hand, where as soon as it turns red, you're going to hope that it just turns higher. And by the time it completes its retrace, you will most likely sell it at the worst possible time, if this thing goes to something like an 11.5, and that's where really you should be looking to buy it. So to avoid that situation, the best thing to do is just wait for that next opportunity, and it will produce one. Nothing can sustain this type of momentum without some kind of healthy retrace. So I will leave you with that. If you have any questions, please feel free to reach out. Again, my name is Mark Principato, Mark Pre-Markets. Thank you for watching.